time has expired. The gentleman from New Jersey, Mr. Gottheimer, is recognized.
Thank you, Mr. Chairman. Thank you, Madam Secretary. This year we have seen turmoil in the banking system, as you were talking about, and I'm concerned that our regulatory response hasn't focused enough on our small, medium, and regional banks that provide important competition in our banking system and obviously lifelines to American families and small businesses in our communities. Madam Secretary, do you believe that our response to recent failures and our broader regulatory approach ensures the health of small, medium-sized banks, so we don't end up having a situation where we only have a few large banks that are simply too big to fail?
I believe strongly that a diversified set of financial institutions is best for America and provides a differentiated set of financial services that are appropriate for different borrowers.
Thank you. I'm particularly concerned that the current regulatory environment disadvantages some of the small and medium regional banks. Specifically, most recently with First Republic's receivership, I'm concerned that the largest banks were given preference in the bidding process, just enabling the biggest banks to grow even bigger. My understanding is that the FDIC kept certain regional banks from even bidding on First Republic. Madam Secretary, do you believe that well-situated small, medium, and regional banks should have the same opportunity to bid on failing banks as their larger peers do?
I believe that there should be a process with multiple bidders. It's up to the FDIC to run that process. And I know that there were multiple bidders in the case of First Republic.
But my understanding is that the regional and medium-sized banks were left out and not allowed to, many weren't allowed to bid who were interested. Do you know about that?
I'm not sure that that's the case. I believe that there were multiple bidders and they were not all large banks. So
no one was excluded if they wanted to, in your understanding, if they actually were interested in bidding, that they weren't told, sorry, you can't bid.
I can't give you every detail of what the FDIC did in this case, but I do know that there were multiple bidders, and that included some smaller banks, certainly some regional banks. The FDIC is required to accept the lowest cost bid, and it did that.
Okay, thanks.
Morgan
yeah, no, I've just
case.
heard a lot of stories that banks were literally told, sorry, you can't even apply. You can't even try to bid for this. So, but I'll come back to you if I learn more about that. Switching gears, shifting focus to digital assets. Following the collapse of FTX last year, financial regulators have obviously ramped up scrutiny of digital asset firms. In a recent interview, you said that you, quote, see some holes in the system where additional regulation would be appropriate, end quote. Do you mind elaborating a little bit on that statement? Where do you see the holes? Where do you think additional clarity is needed for digital assets, please?
Well, one hole pertains to the supervision of spot markets where digital assets are not regarded as securities. So there needs to be regulatory authority there. And then I would say that stable coins is a type of digital asset that really requires a full-blown federal regulatory framework and would very much, I think this is an area where congressional legislation is appropriate to create an appropriate prudential framework.
Thank you so much. When you spoke before this committee last Congress, you agreed with me that the state and local tax deduction cap has led to disparate treatment of American taxpayers. I'm concerned that the cap is pushing Americans out of states like mine and New Jersey as they seek lower tax states that are subsidized more heavily by the federal government. The House Ways and Means Committee is currently marking up tax legislation that noticeably does not address the burdensome SALT cap. It leaves it out completely, which I think is outrageous. In your view, does the SALT cap favor states that are heavily subsidized by the federal government and disrupt America's decisions on where they choose to live? Have you seen that at all in your work and how you study where finances are moving around the country?
I mean, it certainly does have a disparate impact on different states. The Biden administration has generally taken the view that it's up to Congress to decide what to do about that.
So you think it's probably a good idea for us to be addressing the SALT cap?
Well, that is the view that we had taken in recently.
Last quick question I'd like to get in on the national debt. Obviously, higher interest rates make our debt grow faster. What options is the department considering to address the fact that our country will be spending more money to service the national debt in the high interest rate environment?
So President Biden proposed a full-blown budget that contains substantial deficit reduction, $3 trillion over 10 years. At the same time, it invests in America and
Time has expired.
revenue raisers.
Thank you.